Okay, great. So we'll go ahead and jump into it. My name is Michael Batala, and I will be your speaker today. I've been with MindBridge coming up on 5 years, working closely with customers and prospects to understand the value of MindBridge. Most recently, I've been working very closely with organizations developing different uses for our subledger modules and how anomaly detection in these areas can be help with efficiency and understanding the behavior within your organization. So in terms of the agenda for today, we'll do an overview of some of the different subledger modules that we have, and then we'll jump into the tool so you'll be able to see these subledgers in action, and then we'll wrap up with a Q&A. If there's any questions along the way, please feel free to put those in the attendee hub, and we'll address those at the end of the session. So first, let's start with an overview of our subledger analysis. This is just the expanding MindBridge horizon. So as you can see here, we've got our general ledger analysis as kind of our core offering, or has been our core offering. However, MindBridge has continued to expand into different areas to give a more holistic view of how these transactions are affecting the general ledger, and to get more pointed in terms of the detail that's provided within these subledgers. So some of the key subledgers that we're working with today are payroll, payables, and charge cards, revenue, and receivables. And what it really boils down to is understanding the ledger, the behaviors that are existing within the subledger. MindBridge aims to shine a light in terms of analyzing these patterns in the data by cross-correlating the relationships related to multiple fields to surface these areas. So we look for rare interactions, atypical volume, and unusual amounts to take a very human-centric approach to what's normal behavior within a customer, a vendor, an employee, and start establishing a baseline for what's normal to then detect different anomalies that are existing within these different subledgers. So as you can see here, these are out-of-the-box analysis, and some of the control points that we offer around these areas, such as payroll, are to aim to identify the employee behavior. So as we can see, we've taken the rare pay control point, or the rare control point, and we've applied it to a few different fields where we can understand rare checks, rare pay codes, rare departments, rare pay code for the department. So multidimensional analysis in terms of how these things are being affected. With the rare control point, this is something that was part of our core general ledger module, but it's been configured to better analyze the subledger data around payroll to build that understanding of how these different fields interact with one another. Another key control point that you can see here is the unusual changes. So once again, an unusual amount, so being able to develop a kind of baseline in terms of what's a typical amount, what's a typical change in the amount, or change in the number of payments. So developing that baseline of behavior and then detecting these anomalies from here. Some of the use cases that we're able to kind of see within the data set is the seasonality related to payroll, the different rates employees are paid, the expected rate changes or promotion periods are easily seen. And then what we're able to then do is use a time series to determine what's normal over time. So this is an example of our payroll module and some of the control points we have within there. Another example is our vendor payments machine learning, where we have control points that are there to analyze the vendors and how that relates to the general ledger accounts, the cost centers, the users, and any other fields that are relevant to understanding your vendors. So these can be configured or tweaked to support looking at unusual amounts and deviations and rarities from multiple perspectives. For example, I was working with a client recently who used the unusual amount control point, but they didn't have any cost centers. So instead of cost centers, they linked it to the different company codes that they had within the organization to support and get relevant analysis from that particular control point. So it really comes down to mapping the data within the tool, and you'll be able to analyze it from a variety of different perspectives. In terms of the vendor payment module, a few of the things that you can look at is rare combinations of currencies and vendors. You can analyze change in the trend of an amount by a cost center. We can also monitor anomalies that could indicate gaps in internal controls. So higher risk transactions could be indicators of bypass or lack of controls as it relates to specific vendors. And this is something that we're able to give our users visibility into. Sure. The last example that we'll cover, and then we'll head into tool, is this is our charge card machine learning anomaly detection control points. So what we're able to look at here is, atypical volumes, unusual amounts, and you can see it's this very cross-correlated approach in terms of understanding the behavior that's existing within charge cards. One of the unique aspects here is you've got your MCC codes. We've indicated that as your different charge code groups. So we can map these different charge code groups to understand what's typical for these different charge codes and establish thresholds to the way we evaluate them. This plays out in terms of, once again, understanding any gaps in your controls within the organization, any unusual trends that could surface fraudulent behavior, or not just fraudulent behavior, but behavior that goes outside of our norms and our expectations and policies within the organization. And then, of course, with anomaly detection, being able to understand and identify unusual spending patterns. So this can be by cardholder, by cost center, by merchant category, and we can get these multidimensional views of how it impacts the data coming through. So what we'll do is we'll take a quick pause here and we'll launch our first poll. That way we can make sure everybody gets their CPE credit. So we'll go ahead and just give everybody a few seconds to answer that first question. While that's loading, I'll go ahead and bring up the analysis, and we'll go ahead and talk through a few of these subledger analysis we have. So I think everybody's had enough time to get that poll answered. And what I brought up here is our vendor demo. So within our vendor demo, this aims to understand vendor behavior within the organization. And as you saw on that previous slide, we've got a number of different control points that are looking at deviations in the amounts, unusual amounts, atypical changes in volume and amount. And it really understands and different rarities within the transactions to understand typical vendor behavior and things that are anomalous that could be impactful to the controls and our financial statements within our organization. This looks very similar user interface to what you see in all of our other modules. In our anomaly detection or our subledger analysis, we have our risk overview, our risk segmentation, our data table, and annotations. Our risk overview is very dynamic, where we can view the risk by vendor, cost center, or account. And then use these categorical fields to drill down. We can view the high, medium, and low risk, as well as entries over time, a perspective on our vendors, showing the top 25 vendor risk based off of the payment dates, and then kind of a scatter plot of different fields that are included. So in this case, we can view the scatter plot based off of vendors, or we can also look at which GL codes indicate the most risk based off of the vendor transactions. So being able to cross-correlate the impact from the vendor and their activity as it relates to your general ledger and how it's being posted. So within this area, we have our high, medium, and low risk. As a reminder, low risk indicates common and reoccurring entries. So this is the baseline of activity. The medium risk is the more complex entries that we're seeing. And then the high risk is the anomalies that we're not seeing elsewhere. Within the high risk or any of these categories, we can drill down and we can view things in a variety of ways. We can view them based off of cost center code, so we can see who our riskier cost centers are, and we can see all the activity within a particular cost center. Or we can scroll down and we can see just the overall entries associated with the vendor transactions, and we're able to drill down into any of these areas. So when I select a transaction, that'll bring up the details of the entry, as well as the different risk perspectives. So from here, I can view the overall risk, the cost center risk, or the vendor risk, and I can see how that compares to the other data that's seen within this tool. In this case, we can see the selected entry or this particular vendor. This is where the risk score for this entry lies, and this is where the typical risk profile looks like within this organization. So as you can see here, it's on the outer end as an outlier. Not only can we build an overall perspective, but we can also break down specific control points within these modules. So this is very beneficial in terms of understanding how these data points compare to the other data points and build out that explainability around anomalies within this data set. So one of the things we can drill down into is this is where most of the activity occurred. This is something that you can slide along to get a lot of detail into, and we can see here's where the selected entry is. When I remove the selected entry, we're able to just see the data points here. And one of the key things that I like about the tool is we develop an expected range from the model. So this selected entry was, or this entry was selected because it was outside of the expected range. And that was indicating that it should be higher risk for our atypical changes in the mount control point. As we scroll through our different control points here, we can see, once again, we build out nice visualizations to support the explainability around why these particular entries are selected. This is another example of deviation in the amount for the cost center. So deviation in the amount is looking for extreme outliers of the amounts as it relates to the other amounts included within this particular cost center. And this is where this data point lies, and this is where the typical range lies for this cost center. So once again, we're able to see what's typical and where this entry is that was higher risk within our system. Another good one is this rare vendor for the cost center, so we can see which vendors are associated with the cost center and how frequently they interact. In this case, we can see this is once again on the outer end here for the selected entry, which is why it's indicated as higher risk. So we've got a number of different ways to visualize the data within the tool, and that's very helpful, especially when you can segregate these different tests that are existing within our subledger analysis. So what I've worked with some clients on is separating out specific tests that are meaningful to the organization. One of those tests is understanding atypical volume for a vendor. And what we're able to do is quickly filter the control points for atypical volume. We'll go atypical volume for the vendor, apply that to the data set. Now this whole page is going to update related to atypical volume for the vendor. What I'll also have to do is toggle my view to understand the vendor. And now I can quickly see, which vendors are triggering atypical volume. What does atypical volume mean? It means that if let's say on a monthly basis, we had one invoice, and then all of a sudden there's 9 or 10 invoices in a given month, that's atypical volume for that vendor because in the past, there's only been a single invoice issued to that vendor. So what that's able to uncover is inconsistencies in terms of transactional volume, and that could lead to a variety of issues. Working recently with a customer, they had a director of finance that had their bonus linked to the gross profit within their organization, and what that director of finance was doing was delaying recording vendor payments in order to increase his quarterly bonus. So what we were able to do is incorporate this atypical volume for the vendor, see the spikes of activity, which were indicated right after the end of the quarter, and we would have been able to uncover some of these situations or augment the professional judgment on why is there atypical volume right at the end of the quarter, something that I want to quickly look into. When you looked into it, you would have seen that there's a specific user that's entering these higher risk transactions. And as you dug into it a little bit further, the transactions were not unusual in nature, but the volume is. So why are these atypical volume being posted? And the user was able to uncover that it was related to timing for that user's for that director of finance bonus. So these are the type of insights and unique insights that you can get through a tool like ours. Is it points you in the right direction to help you surface these unique circumstances. When you reset the filter here, there's a variety of different ways that we can also look at the data. You can go ahead and look at specific accounts. We can break down specific cost centers. If we've got users functions within the tool, we can break down the users who are entering vendor payments into the system, and this can give us a good understanding of how users are interacting with vendors, how cost centers are interacting with vendors, and we can segregate our tests and be very specific in terms of what we want to test and what we want to look at. So when we talk about being pointed allows you to be very efficient in terms of the way that you're testing transactions. So some of the other analysis that are available are related to Payroll. So payroll is one of the interesting areas because there's obviously a lot of risk associated with payroll. And that's something that I'm going to pull up for you right now is a nice view of our payroll module to see how this differs from our other subledger analysis. Once again, out-of-the-box control points ready to analyze your data. In terms of how data is entered into the tool, it really comes down to a mapping process. So on the data ingestion screen, you'll take the column headers or the fields of that Excel or CSV file, and we'll map that to MindBridge. There's a lot of flexibility in terms of mapping because you can add any ancillary column as a column for filtering. What that means is we can get multidimensional views of the data as it's relevant to your organization. Once again, in this module, these control points are geared towards understanding the behavior. And the behavioral patterns it can be indicative of a lot of different things, but they uncover unique insights that are outside of the organization's policies. These subledgers are great to identify consistency, excuse me, consistency in terms of how things are being recorded. So the higher makeup of low risk transactions that we see, like in this case here, represent that we have strong controls within the organization. And now we can better understand what areas are the medium risk impacting and how, why do we have a decent makeup of medium risk? Is this just more complex entries? Or is there areas that maybe we have a bypass or lack of controls? And then once again, the high risk are the true anomalies. What is going on in terms of anomalies? These are obviously clear indicators of unusual events or uncommon events that we would want to look into and understand how that impacts our financial statements. So from here, there's also the ability to build out a risk segmentation. Oops, let me go. So we didn't mean to click there. The ability to build out a risk segmentation similar to our GL module where we can select our risk score and we can leverage different fields to build out a nice holistic view of how this data set is affected. And then we can go ahead and drill down into these different circumstances that may be interesting. A couple of the things that I've seen in terms of unusual payments is you'll see overtime type of payments associated with certain people that it hasn't been associated with in the past, giving you those type of insights in terms of, this rare payment type for the employee. Why is that happening? In this particular data set, we have a number of back pay type of transactions. So that's why there's a significant number of rare payment types associated with employees in this particular data set. These subledgers are very valuable in terms of identifying these anomalies. And like I said, there's a lot of flexibility here to help you dig into the data to quickly get those insights. Within the data table, one of the things I haven't touched on is just the ability to filter. So if we do have a vendor or an employee or a operating expense account that we want to focus on that has got higher volume of activity, we can quickly scope these different areas. Maybe it's a certain pay code I know is related to that back pay. I want to make sure that's consistently recorded within our payroll. I can select that code and I can profile those transactions. The ones that are higher risk are likely the ones that fall outside of the typical process we used for that particular pay code. So it's a good indicator of things that fall outside of your policies and your compliance and relates to the accuracy in terms of the recording of these transactions. So I know it's a lot to take in terms of our subledger analysis. A couple of the key points to take away with is this is out of the box analysis. So time to analysis is very efficient. The second piece is these control points really lean into the machine learning and our data science, which helps you uncover the patterns within this data set, which is very unique compared to using traditional approaches, which are more KPI or key performance indicator based or rules based, based off of different thresholds within the organization. This helps you really uncover those underlying patterns. So let's go ahead and bring up the last poll here, and then we'll go ahead and jump into some of the different questions that have come up. So while you're answering, the polling question, I'll look into some of the questions that we've got here. In terms of the questions, what is the most interesting thing a customer has found using this? So we are under a non-disclosure agreement, so I can speak in generalities in terms of some of the different situations we've uncovered. The one that I provided during today's demonstration in terms of that director of finance postponing payments and then increasing the volume of payments after the end of the quarter was a very interesting one that I've had some involvement with. Through our customers using this, there's been a number of different circumstances where we've identified vendors that are pretty unique in nature. For example, when we were building this module, we actually pulled the California data set, so public information live from the state of California. When we started looking through who a higher risk vendor was in the analysis that we have, we identified this one vendor called AbleGov. When we started looking them up, we noticed it was a very light website where there wasn't much information on the website. It was just a single page. We then did a Secretary of State search where we looked up, when they were created and who they were created by. So it was a legal Zoom entity. And when you look at the volume of activity through that particular vendor, it was very significant. It was tens of millions of dollars. So that amount of activity with the profile of who that vendor was very unique. The other aspect of that vendor was they had a lot of different kind of areas that they were recording transactions into. So it wasn't just a software provider or just furniture provider or office supplies. It was touching multiple different areas, from machinery and equipment to office supplies to rent expense. So there was a lot of different areas that it was touching, which made it very unusual. And this was one of the higher risk vendors that was indicated in that data set. The second question that we've got here is, once I have one of these modules, can I use it for everyone in my company? So yes, you can work with our team to figure out who you want to have access into the tool. We've got different user management features in terms of who can touch specific engagements. We want to be in the hands of all the users within our organization, within your organization, because we want to be able to help augment your team and add to the efficiency in terms of how you're looking at data and testing things that are relevant to the organization, so you're more pointed in your efforts, which yield better results. So hopefully this presentation gave you some perspective on some of the ancillary areas that MindBridge is able to touch on. And we're looking forward to building out more use cases and expanding the subledger analysis with our customers and the team at hand. So if there's no more questions, I'll just stick on a few more minutes here to answer any ancillary questions or additional questions. But thank you for everybody's time. If there's any follow-up questions or specific use cases that you have that you would like to discuss, please feel free to reach out to me directly. I always love discussing specific use cases and understanding your needs. Thank you.